The reason why the majority of people lose money in the stock market is because they don't understand how to poop, but you're going to know how to poop correctly. That way you can build wealth when bad things happen in the stock market. What is poop when it comes to investing? Poop stands for panic, leads to overselling, leads to opportunity, leads to profits. When you understand poop, you're going to find the opportunity. That way you can build wealth while the majority of people are losing. Look, I get it. I know poop is a silly acronym, but the whole reason behind this is so it's easy for you to remember, because the reality is when craziness happens in the markets, when craziness happens in the economy, people lose their sense of logic. But it's easy to remember poop. So hopefully next time you see something crazy happen, you can remember this poop, because the reality is when markets go down, you don't actually lose money unless you sell. I mean, the only kind of exception to that is if your company goes bankrupt. But if you're investing in a strong asset and it's down 50%, you don't actually lose any money unless you sell. And this is where you got to understand how poop works, because anytime you see something bad happen in the markets, you see panic. Why does panic happen? Because you get that bad economic data, and then you get the media effect, because everybody's now talking about how bad things are, and this creates a negative spiral because you can buy and sell stocks with an instant. And so now when people are buying and selling and selling and selling, people start to freak out, because now this pushes the markets even lower, which leads to overselling, because now people want to get out while they still can, because they're freaking out. They don't understand what's going on, which then creates opportunity, because then good and strong assets go on sale. They're cheaper to buy, and that creates opportunity for the financially savvy, because now you can go out and buy some great investments at a great price, which creates the opportunity for profit. But in order for you to profit, you have to have the long-term mindset and understand that investing is a long-term game. It's crazy to me when people say, oh my God, I invested some money 2 months ago and now my portfolio is down 10%. It's only been 2 months. You want to invest for the next 20 years. Who cares what happens in the short term? We know that market crashes happen. You want to use this as an opportunity to buy even more. Now, before you go out and just dump your money into markets, you got to know your strategy. This is the financial education. This is what I talk about in a lot of my videos. We talk about this in many different places, but you got to know your strategy. If your strategy is dollar cost averaging, every week you're putting money into the markets, you're buying the S&P 500. Every Wednesday you buy the S&P 500. Then what do? When the markets go down, you keep buying the S&P 500. You don't change the strategy. The mistake that so many people make is they invest into their 401k. Markets go down, you stop investing in your 401k. You stop investing when things are on sale. See, that's not what you want to be doing. When things are on sale, the only change you want to make is potentially increasing how much money you invest. So now maybe you invest a little bit more aggressively. This is where you got to understand. Remember, poop. It creates opportunity, but you only capitalize on the opportunity for actually buying. When markets were crashing in 2020, what did people do? They sold and they stopped buying. What happened in 2008? People sold and they stopped buying. What happened in 2000? People sold and they stopped buying. And trust me, I know this firsthand, because when the 2008 crash happened, that's when I started investing in real estate. I didn't have a lot of money, but that's when I got started in my investing journey. Everybody told me that I had lost my mind. They told me that real estate built bankruptcies, it didn't build wealth. But to me, I saw it as an opportunity. Now, I wasn't that smart. I just kind of happened to get involved with investing at that time when real estate was very cheap. But I saw the sentiment then. The next major crash was 2020. This was when I was on YouTube. I was talking publicly about how I was buying stocks on the way down. I didn't know what was going to happen. Nobody knew what was going to happen in the future. It was a crazy time, but I was getting flooded with comments of people saying the same thing. Jaspreet, are you out of your mind? Markets are collapsing. Why would you want to buy now? And then we saw what happened. So we know the markets will go down. We know that we're going to see volatility in the markets. You want to use it as an opportunity, but in order for you to use it as an opportunity, you got to be able to cut through the emotion, and you got to be able to find the opportunity. Now, what do you invest in? Well, this depends on now your financial education. This depends on your financial trends. This depends on what you see as the opportunity. That is a whole different section. What we're talking about now is the financial psychology side of how do you build wealth. The next part that goes a little bit deeper is the financial education and the financial trend side of understanding what industries you want to invest in. How are you actually going to invest? Are you investing in funds or individual companies? That's now a little bit deeper of how do you get involved in finding the right investments. Those are the things I'm going to be talking about on my Investor Summit on August 14th and 15th. But this is where now you got to start investing in financial education. That way you can find the best opportunity for you. You don't got to be perfect, but you just got to get started. I made this example a little while ago. It's just like getting in shape. You can say, I want to get in shape, and then you can start looking at all these diets. Do I do keto? Do I do carnivore? Do I do vegan? Do I do this or that, whatever? And And then you can look into all the different exercises. Do I do HIIT? Do I do the low intensity stuff? Do I do yoga? Do I do Pilates? Do I do this? Look, at the end of the day, just get started. Get rid of the donuts, the Twinkies, and the ho-hos and walk on a treadmill. Once you do that, now you can say, maybe I add in some weightlifting. Maybe I change my diet a little bit more. You just got to get started, and then you can work to refine. It's the same with money. Just get started, and then you can work to refine. You got to learn to walk before you can run. And you got to run before you can sprint. That's the way the game works. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.